Bitcoin has taken a significant hit this week, sending shockwaves through the crypto community and leaving many investors on edge. The sudden drop has raised concerns about the stability of the market and what this means for retail investors across the United States. Analysts are pointing to a combination of factors, including regulatory pressures and macroeconomic shifts, which have contributed to this downturn. With the SEC ramping up scrutiny, it's crucial for you to understand how these developments could impact your investments. Stick around as we break down the latest news and reveal strategies to navigate this turbulent landscape. You won't want to miss this vital information. It could help protect your portfolio in these uncertain times. In the past week, Bitcoin has experienced a significant price drop, plummeting to around $25,000. That's a staggering 15% decline in just a few days, shaking the confidence of retail investors across the country. This crash comes amid rising concerns over regulatory scrutiny. With the SEC intensifying its focus on digital assets, many are wondering how much longer this downturn could last and what it means for their investments. Major players like BlackRock are keeping a close eye on these developments. Their recent push for a Bitcoin ETF signals a strong belief in the long-term potential of this asset, but even they are not immune to the current volatility. Many retail investors are feeling the pinch as platforms like Coinbase report increased trading activity, with users rushing to either buy the dip or cut their losses. Just last week, trading volumes surged by 30% as investors reacted to the sudden price shift. For those holding Bitcoin, it's essential to remember that these price movements can have tax implications. If you decide to sell during this downturn, you could face capital gains taxes, which the IRS will be watching closely. So, what does all this mean for you? It's more important than ever to stay informed and consider your options carefully. Whether you're thinking of holding, buying more, or selling, understanding the landscape is crucial in these uncertain times. As Bitcoin continues to tumble, let's break down what this means for everyday investors in the US. Imagine you bought one Bitcoin when it was valued at $30,000. Now, with the price dropping to around $25,000, you're facing a paper loss of $5,000. So, what are your options? Let's say you decide to sell on Coinbase. With their trading fee structure, you'd incur a 0.60% fee on that sale. That's about $150, bringing your total back down to $24,850. On the flip side, if you choose Kraken, their fees are slightly more favorable at 0.26% for takers. This means you'd only pay about $65 in fees, leaving you with $24,935 after the sale. But here's what nobody is saying. While these fees might seem small, they add up quickly, especially in a volatile market. If the price of Bitcoin rebounds, even slightly after your sale, you could miss out on potential gains. It's a tough call for retail investors who are trying to navigate these choppy waters. Imagine if you held on just a little longer and the price surged back to $28,000. If you sold then, your net profit would be significantly higher. At $28,000, after Coinbase fees, you'd walk away with about $27,850, while Kraken would leave you with approximately $27,935. Those differences might not sound enormous, but in the fast-paced world of crypto, every dollar counts. For retail traders, these choices are crucial. And remember, if you sell now, you'll still need to report that capital gain or loss to the IRS when tax season rolls around. The potential for tax implications can add even more weight to your decision-making process. It's essential to consider not just where to trade, but also how much risk you want to take with your investments. In this unpredictable environment, being strategic about your moves can make a significant difference. All right, let's break down some concrete action steps you can take this week to navigate the current Bitcoin crash. It's a volatile time, and having a clear plan can really help you manage your investments effectively. Step 1. Assess your portfolio. Take a moment to review your current Bitcoin holdings. If you're seeing significant losses, consider setting a threshold for when you might want to sell to cut your losses. A common practice is to limit losses to around 10-15% before taking action. Step 2. Utilize dollar cost averaging. If you believe in Bitcoin's long-term potential, now might be a good time to buy in smaller increments. For example, you could invest $50 to $100 every week for the next month. This strategy helps mitigate the risk of buying all at once during a downturn. Step 3. Keep an eye on technical indicators. Use platforms like Coinbase or Kraken to monitor key price levels and candlestick patterns. Setting alerts for specific price points can help you stay informed and ready to act as the market fluctuates. Step 4. Explore DeFi opportunities. With prices down, it may be a good time to look into decentralized finance platforms where you can earn yield on your Bitcoin. Just be sure to research the risks involved, as not all platforms are equal in terms of security and returns. And finally, step 5. Prepare for tax implications. As you make moves, keep track of your transactions, especially if you decide to sell at a loss. This record will be essential when filing taxes next year, as you can offset gains with losses to help reduce your taxable income. Following these steps can help you stay proactive in a challenging market. Remember, it's all about balancing risk and opportunity as we navigate this Bitcoin crash together. As we look ahead to the next 90 days, it's crucial to stay informed and adjust your strategy based on how Bitcoin behaves in this turbulent environment. Will you be considering your tax implications as you navigate this crash? Or will you take a wait-and-see approach? Share your thoughts in the comments below. And remember, subscribe to the channel for daily crypto updates to stay on top of the latest developments.